This video is an absolute emergency. This is a state of emergency situation that we're in. We need to have a extremely serious conversation. One of the most serious conversations we've ever had regarding the stock market. And so let's just go right ahead into it and let's begin this serious conversation, okay? So obviously the stock market was horrible in the month of April. Thank God it's over, right? The stock market was horrible this week, and it was even horrible and even worse today, where stocks have fallen so much. Apparently this was the biggest drop in a month since October of 2008. Now, we all know what happened in 2008. So what I want to do here is I want to calm everybody down. I want to give you guys some honest and real strategies and truth. And I want to tell you guys what exactly I think you should do and what I plan to do to set myself up to make money in the future. Because obviously it is what it is. There's nothing you could do about the current market cycle. It's almost like, you ever hear the saying, don't fight the Fed? That's literally what's happening right now. You know, last thing you want to do is fight the Fed. Now, this isn't a bearish video. I am still bullish. As a matter of fact, I actually still think the market will end positive this year. But unfortunately for many investors, their portfolios will not be positive. Many investors' portfolios will be negative. And here's the reason why. Many investors are under this illusion that risk assets, because they've dropped 40, 50% from their all-time highs, can't go lower. And so I'm here to tell you now that I think the absolute worst thing you can do is continue to buy the dip in risk assets. Okay? That is why you haven't seen me make any videos lately about DraftKings or SoFi or Snapchat, which are the risky stocks that I've had in my portfolio. Keep in mind, makes up less than 5% of my entire portfolio. And the reason why I haven't made many videos is because I stopped buying them. I realized a while ago what we're in, and now it's been confirmed. You know, this isn't a bearish video because I think we're due for a bounce. But I think we need to have a serious conversation. And I have to say this. This is going to be controversial. It's going to be mean. But I don't care anymore. Because people freaking got wrecked out there today. Did you see what happened to the market? Holy God, goodness shit. People got killed today. And somebody has to speak up and say something. So I'm going to go out on a limb and I'm going to say this. If your favorite investor is still telling you to buy risky assets or investments with this whole weird framing that, well, they're so low now, the risk is not as much, so you should buy. I'm here to tell you now, you should unsubscribe from those people. Any YouTuber you follow that is telling you to buy risky stocks at this point, unsubscribe. Leave the Discord. Demand your refund right now. I got to take the gloves off now because days like this make me so upset. Because for me personally, not a guru, but for me personally, my portfolio actually held up okay. I'm down. I'm losing money. Don't get me wrong. I ain't Warren Buffett out here. Warren Buffett is up 10% year to date while everybody else is down. I ain't Warren Buffett, but I'm also not down 50% of my portfolio either. I'm down about as much as the market. 8, 9, 10%, something like that. And it doesn't feel that bad. It actually makes me feel good. It makes me feel good to know that I'm pretty much down as much as the market. You know, when I look at my portfolio and I see it's down, but then I look at the market and I see it's down, then I don't feel as bad. I'm like, oh, okay, well, the market's down. So, of course, my portfolio is going to be down. But when you look at your portfolio and you see the market is up and your portfolio is down, or you see the market is down 10%, but your portfolio is down 40% or 50%, that's when it starts to get like, okay, something's got to give. I need to do something. And that something that you don't know that you need to do is what I'm here to provide. So I'm here to tell you now, get out of risk. No more. Should have never been in a portfolio. Completely restructure and change everything that you did in 2021. All the YouTubers you followed that had you buying all these risky garbage assets, unfollow, unsubscribe, goodbye, the end. Tell YouTube I do not like this content when it gets recommended to you. Start finding people who actually give great advice and try to help you. There's a few of them on YouTube. And this is the time. It's like sports. You know how they say there's a difference between retool and rebuild? See, in January and February, you could have retooled your portfolio a little bit, right? March, April, the market is telling you right now what's here. It's here to stay. The pain is here to stay. The problems with the Fed is here to stay. Now, that doesn't mean sell all your stocks. That doesn't mean that. That doesn't mean panic and go all cash and, oh my God, everybody's going to die. No. That doesn't mean that. That means instead of retooling, you need to rebuild. You need to rebuild the whole franchise. Trade your stars. Get rid of some people. Waive some players. Start drafting better. It's time to completely rebuild that portfolio. And so now, where do you start? Here's where you start. And I can't give financial advice, but all I can say is if I was in your position, this is what I would do. If I had tens of thousands of dollars and my largest holding was Tattooed Chef or The Honest Company or SoFi or whatever, anything, Smile Direct Club, this is all I would do. I'm not saying you have to sell everything, but I would simply say this. In terms of percentage of portfolio allocation, what is the largest percentage of my portfolio consist of? Is it risky assets, or is it safety or balance or strong companies with strong fundamentals, right? If your portfolio is mostly risk, it's time to wave the white flag. It's time to concede. Tell the market you win. I was wrong. You were right. Now I'm going to get down. Instead of laying down, I'm going to get down and get with the freaking program. Now that I've realized I can't beat you, I'm going to join you. And I'm going to take some of that money that I unfortunately lost and get it out before I lose more money. By the way, I hate to say this, but 2 months ago, I told you that all those garbage stocks that me, Kevin, and Jeremy called out were going to go lower. I called it. I said it. I'm sorry. But here's the key. Because even though every other stock is down, here's the difference. S&P 500 will one day come back. NASDAQ will one day come back. Index funds will come back. Apple will come back. Google, Microsoft, Starbucks, Disney, whatever. You know what's not coming back? The super risky assets. Because let me tell you guys something. And this is going to be a long video. Because we have a lot to say today. The moment of truth is here. The chickens have come home to roost. It's time to shut up, sit down, and listen to real reason. There's no more going to the freaking moon. Look what happened today. And you know why what happened today? It's because, as Warren Buffett says, you had all this wretched excess in 2021. This is what happens when the bubble pops, mixed with the Fed and all the other issues going on. So where do we go from here? You have got, it is a must that you get out of risky assets. I know it's going to hurt. I know these YouTubers keep telling you one day they'll come back. One day I promise you, Tattooed Chef is never going back to $20. Okay. I'm sorry about that. Got something stuck in my throat. Let me go look at these stocks. Because I'm telling you guys what it is. You guys need to know the truth. Okay? Smile Direct Club is never going back to $18. Okay? The Honest Company is never going back to $22. Microsoft can easily go back to the 300s. Apple can easily go back to the 180s and beyond. Starbucks can make a comeback. Disney can make a comeback. These are all great companies. See, the truth of the matter is, a lot of these venture capitalists actually tricked retail investors and they made a killing off of all of us. And let me tell you how they did it. Instead of IPOing the traditional route, because there's all these roadblocks and checks and balances, they used something called a loophole. That loophole is now today known as a special purpose acquisition company, otherwise known as a SPAC. A bunch of garbage companies with greedy venture capitalists who knew that these companies were horrible took advantage of the fact that retail investors were buying any and everything, regardless of looking at the fundamentals or how the stock's doing or the management or doing any real, genuine, deep research, right? And so because of that, they took the easy route and used the loophole, and they got on the stock market and made a bunch of money off of retail investors. So unfortunately, I know it hurts to hear this, but a lot of the companies that some of you guys are invested in should have never been on the stock market in the first place. They're garbage, horrible, pathetic, trash, dookie in the booty, stinky diaper, stepto meatball companies. They should have never been listed. But because we were in that crazy bubble, you had so many trash companies getting in the stock market, and a whole bunch of venture capitalists ran away and made millions and billions off of us. It's time to recognize that. It doesn't mean you're dumb, doesn't mean you're an idiot. We all make mistakes. Trust me, I've made mine too. I am not above this. I've made my mistakes too. But now it's time to recognize the mistakes that you have made. And it's time to join the good side. Leave the dark side. Join the light side. Come over here with Luke Skywalker. Get away from the Emperor and Vader and all those people. Join the light side. Start allocating that money into the S&P 500. Trust me, it will come back. And one day it will reach new all-time highs. The stock market is like the most resilient place on the planet. It always bounces back. We've had so many fear moments in the world throughout history, and this is simply just another one. But the way you avoid getting wrecked and you allow yourself to take advantage of this fear is by buying good companies. And if you're not that great at stock picking, by the way, if you're down 50%, you're not that great at stock picking. I wouldn't consider myself great at stock picking. That's why I buy index funds. I do my best. I try my hardest. But I recognize that I'm no Warren Buffett. So instead of not joining the market, I've gotten down and joined the market. Instead of straying away and buying any and everything because we're in a bull market, I bought stuff that will stand the test of time and will be here. Say this all the time, guys. How many of you guys use or buy Oatly, Honest Company, Palantir, Tattooed Chef, Corsair Gaming? How many of you guys even have the Voyager Digital app? How many of you guys even use Planet 13 Fitness, the very good food company? EXPI, Shift Technologies. How many of you guys have bought a car from there? Why are you buying that stock? The companies that are going to survive are the companies you use. Where's my wallet? I don't got my wallet on me, but I have a Costco card. Costco will be here. Buy. Netflix will be here. I know. It's not popular to say that. But I'd sure as hell rather own Netflix than tattoo freaking Chef and the Honest Company. Right? Nike. Everybody wears Nikes. This is the way you need to start thinking going forward. The companies that everybody uses and does business with is what's going to come back. And the companies that you ain't never even heard about since you started watching YouTube are the ones that ain't going to come back. Starbucks. Disney. I know Disney's not popular. I know, but trust me, it's a whole lot better than freaking Tattooed Chef and the Honest Company and Voyager Digital. Visa. Apple. Gotta find more stuff. Nvidia. Salesforce. Adobe. Something. It needs to stop. And I'm having this pep talk with you guys because unfortunately, as bad as things have gotten, yes, they can get worse. And I keep trying to tell you guys, a lot of these companies that were a part of the 2021 YouTube, Robinhood, AMC bubble mania should have never been in the stock market in the first place. So guess what the market is doing? The market is getting rid of trash. The stock market is taking out the trash. Now, I know, everything's down. Everything's down, Echoes. I know, everything is down. You're right. I never said it wasn't. But what I did say is, few stocks will come back. Most will not. Times like these is when folks start running out of business. Folks start getting bought out. Investors start losing their money. And I don't want to see you lose money. You see, we are at the end game of the YouTube grift. This is pitchfork season. Things getting so bad, you about to start having angry mobs start getting angry online, of course. Obviously, not in real life. God, no. But online, the online version. Folks are about to start getting real mean and toxic in those comments. You told me to buy Tattooed Chef for $20. Now it's at $3. That's where it's going. I'm just saying. This is the damage that have been done. The few grifters who were lucky enough to make a YouTube channel, build a big following, and make all this money off of Patreon and Discord and selling courses are going to ride off into the sunset with their millions, while the unfortunate investors got absolutely screwed. And that's what we're seeing. So again, I'm not opposed to risk. Never have been. I've always just said it should make up a small percentage of your portfolio. That's what I've said. But honestly, in this environment, last thing you want is for greed to take over. Oh my God, SoFi is almost at $5. I think it's going to 20x. Let me buy it now. No! Look at the freaking market environment. Stop buying risk. Let me tell you when it's time to start buying. When the economic factors, aka the Fed, gets it together, sentiment gets a little bit more positive. And here's the key part. The fundamentals of the companies you're in start to get better. That's when you can start buying a little bit of risk. But for right now, everything is technically on sale. So why would you buy risk? If I had to choose between a good company that's down or a risky company that's down, I'm going with the good company. What's so hard about doing that? You've got to be careful who you're listening to on YouTube. This is the damage that gets done. Yes, the market isn't all ice cream and roses and happiness. No, there's good and there's bad. There's a balance. There's good and evil, masculine and feminine, night and day, green and red in the stock market. That's what happens. And right now, it's a whole lot of red. The green will come, though. But I'm telling you right now, the green's not going to come for everybody. Some stocks may go green. Some of the little small caps will maybe have their bounce eventually. But one thing I can tell you is many of these prices you guys bought it at, these stocks will never, ever in life go back to those prices. And that's just the honest truth. So what do I want you to get out of this video? It's time to rebuild that portfolio. It's not time to get bearish because the market always recovers. It's not time to be fearful. It's time to look in the mirror and reassess and say, okay, the market's only down. The S&P 500 is only down 10, 11, 12%, something like that. My portfolio is down 50%. Something's got to give. I got to do something here. And so for those who are looking for that something of what to do, I'm telling you right now, start off with index funds. Many of them hit their 52-week lows today. VTI, 52-week low. I believe VOO hit its 52-week low as well. You can start right there. Then you decide you want to buy individual stocks. Make a list right now of the companies that you use every day and enjoy. Then once you do that, I guarantee most of the companies that you use every day, consume, look at, use, are probably some of the best companies in the world with insane, crazy growth numbers. So those type of companies, make a watch list of it, Start doing research and figure out if the financials look good, if the management looks good, if the market share and if the growth numbers look good. Once you figure that out, then you can decide if you think it's okay to start buying. I already gave you a few. Costco, Nike, Starbucks, Visa, Pepsi, Coca-Cola. Something good. No more risk. Risk is done for right now. There'll be a chance to make risk a tiny position in your portfolio, but that time is not now. It's just not. And so there you guys have it. That's my rant. Thank you guys so much for watching. Feel free to like, share, and subscribe. And I'll see you guys in the next one.